Well, the International Monetary Fund, or the IMF, stated that there are still many risk factors that can potentially slow the global economic recovery amidst the pandemic. Among the two biggest risks are the new coronavirus variant, the OMICRON, and high inflation in many developed countries.
Amid the pandemic, the pace of global economic recovery is still threatened by numerous risk factors. During a G20 meeting held in Bali, Indonesia, on the 9th to 10th of December, the first deputy director of the IMF, Jeffrey Okamoto, said that the new Omicron variant and high inflation in many developed nations pose a big risk towards the pace of global economic recovery. To reduce inflation, many developed nations will be forced to dial back their monetary policies, which could have a negative impact on developing countries. The IMF is even predicting that global economic growth in 2022 will be at around 4.9%, which is lower than their 2021 projection of 5.9%.
I think it's important to reinforce that there are still downside risks. The new Omicron variant has heightened uncertainty about the viral path of the pandemic, and more aggressive COVID-19 variants could emerge and weigh on economic activity in the future as well. We are also seeing persistent inflationary pressures that could lead to faster than expected monetary policy tightening in advanced economies, and that would tighten global financial conditions with some spillover potentially to emerging market and developing economies. In terms of Indonesia's G20 theme, I am an optimist, so I don't disagree that this is the right theme and the right moment to be talking about how we recover together and we recover stronger.
Meanwhile, the U.S. Central Bank, the Federal Reserve, or the Fed are set to hold a meeting on the 14th and 15th of December. The Fed are expected to signal the speeding up of their tapering process in a bid to counter the surging inflation in the U.S. In the month of November, inflation surged to 6.8%, which is nearly the highest level in 40 years.
So I think it's a real bump in the road. It does affect families. When you walk in the grocery store and you're paying more for whatever you're purchasing, it matters. It matters to people. When you're paying more for gas, although in some states we've got the price down below $3 a gallon. But
previously, in October, inflation also reached a record high of 6.2%, which is the highest level in 30 years. If inflation continues to surge in the U.S., the Fed will possibly raise interest rates sooner than expected, which could affect many developing countries and lead to capital outflow.